Hey traders, Nick Shaheen here, looking at a quiet stock, cheap as can be, Shopify. Of course, being sarcastic here, not knocking the company. What they're doing is amazing. It is expensive from the standpoint I don't look for profitability. If you know me, that's not what I'm looking for when I'm dealing with a stock like this. Here's a funny one: 14,000 or whatever Datadog in PE, but that's wrong to look at the PE for these stocks. So, Shopify. Let's see. Price to sale. What? No. That can't be. Price to sales 58. So is the Datadog, by the way. That's half as much as Zoom. So this, from that standpoint, is half as cheap as Zoom. And it doesn't matter if it's profitable or not. They need to spend a lot of money in order to make a lot of money. At least somebody's projecting forward PE to be profitable. So yeah, 400 is a high PE, but again, it's the wrong metric. It's what about sales? What are they doing for the sales? How fast are they growing the top line? That's the goal for these super duper growers. So here we go. This is the daily chart, nothing fancy, and no lines. I'll show you my lines later. Do I buy the dip? Do I not? Did they report today? They must have. So today is 1029, and they're down 4%. It's a buyable dip, except with a caveat, a couple of caveats. Why is it a buyable dip? If I'm looking at it, it's the middle of the range that it's recently playing in. By recently, I mean since July. Actually, since middle of June. And I'll show you. I'm going to put my lines, and now I'll take them away. Okay, so here are the lines that I've tracked for a while. I think I added this one recently. I don't remember when. It must have been in the last week at least, at the most, not earlier than this. This line is old, months old. I updated it with this note recently after it bounced here. This bounce was not a coincidence. If you look left, it was to the penny where they failed before, and to the penny from which they sprang before. So this is now cement, in my opinion. Unless the markets collapse, then this one will collapse even faster. So that aside, we're going into clearly a pretty potentially violent week next week. But what if nothing happens, right? So if nothing happens, then these are the comments that go with that. And it is a viable dip, but with a caveat, like I said, right? So I'm going to take these lines out, so not to clutter visually. And I'm going to draw new lines with crayons. So visually, if I look at it, right? So there, I want to draw a box, a sandbox within which they've played for the last, what is this, since May, June. And a bunch of months, a lot of consolidation, heavy volume relative to this period of time. So if you know volume profile is that junk right here, it's so useful rather than this junk right here. I shouldn't call this junk, this gold, this junk. So this tells me when the volume happened. So I know on that day there was a lot of volume. This is the same information, more useful. They tell me where it happened, at what price. This tells me where markets like it. You've heard the term price is truth. Well, now you know the truth, where it lies, at what price. So this point right here is the one they love the most. But so is this one, almost equally. So this is support, this is resistance right now. The whole sandbox agrees with me. In fact, look at these candles right here. That's where they traded it the most for this period of time. And so that's why this is good support. This is medium support just from a level perspective. If I want to split the 50% Fibonacci or whatever. Sorry about the zigzag. I had a bang right now. So it's a energy drink and it's just whacking me out. And so that's a reason to buy it. It's a middle. You know, if they give half the rally, that's fine. In this case, they gave it twice, so they might be basing. So when do I chase it up? If I want to chase a breakout, clearly above a new high, they'll take off. So they'll be drawing like some sort of a cup and handle, whatever. It's a neckline they take out. They're going to go. Speaking of necklines, why wouldn't I buy it all in right now, aside from the fact that we could have a disaster next week in the markets? It's because this looks like an inverse cup and handle, right? So some sort of an effort that failed, another effort that failed. They come back to the neckline and they're losing it. The day is not done. So if they close below it, it might invite some sellers. How far down to go this far down? I'm eyeballing. So they bring us down to here. So it is a buy with a tight stop or buy down here after the dump. And if I pass on buying it here, I can buy it on the upside. So what? Or I can buy it cheaper. Not a big deal. I like this candle right here. I bet you this level is going to come into play, whatever that is. What is that? We'll go check it out in a second. And look, it's this one. Look at that. The candle I just highlighted is exactly this point right here. And this point. And this point. So I like it. So now we have the pros and cons. If I'm long, I'm not panicking out of it because I'm long because I believe in it. I don't have any positions in it, by the way. All this is unbiased. If I'm looking to get long, I don't go all in because of what I just said. And if I'm looking to short it, I don't have a reason to short it right here. And if I'm shorting it, I'm shorting markets in general because the catalyst is gone. I'm assuming I'm right about the earnings. So this might show you the inverse cup and handle a little better. I just went into 4-hour charts. So they're losing this line. So I know it doesn't have a nice candle for this one to draw a nice head. Well, if we go in 30 minutes, can we find one? Yeah, we can. So anyway, I'm not a stickler. If they're losing the fight, they're losing it for a reason, and they're going to shoot lower. But that wouldn't be my short. I'm not that fast. If you ever traded this one through options, you know what I'm talking about. This is exactly the 50% retracement of this extension. What does that mean? You've heard of Fibonacci. They usually say they have levels that they like to see come to fruition. This is the 50%. The blue line is current price right now. Look at this. Like to the penny right here. Not coincidences, these people. So the Fibonacci retracement gives me some comfort level that, okay, it's not a blind place where I'm seeing. I didn't know this when I drew this blue line, by the way. So now you see it. You do this long enough, you start eyeballing levels that matter to. Oh, this is a sobering chart right there. How long is this chart? 1 day for a year. This is 12 months. So if you want the thesis against why I shouldn't go all in, a year ago it was $330. Wake up. Oh, volume profile. Okay, those volumes on the left. Look at where the point of control is now. That doesn't mean it's coming down to here. It means that all this trading, this whole area of trading right here, hasn't had time to mature enough to beat this. This is still the pointy area. Look at it. They have other areas building volume, like this stint right here had a lot of volume. And this whole area, the sandbox I drew, is legit. It's growing. And it's fat. So I know kids are giggling in the background. Oh my God, what did you say? So it is, the volume profile is fixing itself. That's where they say consolidation, maturing. It's growing into itself. So, clearly I can take that out. Yes, it does have upside. Duh. So lines matter on the chart. And if you don't look left, you're missing out on a whole bunch. Nick signing out.